Welcome to Trading Lounge and the European Indices report. And today we're going to start with the Italian market. And the reason for that is that the particular sideways correction here that we're looking at here is just that. It's nice and square. It's certainly a sideways pattern. It's certainly got overlapping wave structures, so that means that the highs and lows here are overlapping one another. So it's definitely a corrective pattern across here. Now, when we get that situation, because the correction came from this low here, it moved up here, then it's got its correction here. So in that case, it should move up. So in that instance, when we see a market move up like this, any type of corrective pattern whatsoever that you notice that's moving across here, then it will continue to the upside once it's complete. And that's the same for the downside as well. It's a continuation pattern, so a move that comes down, and then if you can figure out that it's got some type of corrective pattern, and there's 11 or 12 in different types of corrective patterns within Elliott, but if you can recognize that they're correct, that it's corrective, then it's a continuation pattern, and once it's finished, then it will continue to the downside here. Now in this case here, we've got a market that's moved up here, has traveled sideways, and should have another leg up here before it completes, as in this case I've labelled it an A wave to here, an A and a B and a C for the B here, and 5 waves up for the C wave here. This is roughly the same length as this move, this move here is wave A. So yeah, main point here though is not so much the target, but actually tracking the 5 waves to the upside and then looking for the short trade from that point there. So this pattern is pretty much the same across the market. So we can have a look at, we'll start with the stock 50, the top 50 European stocks. And you can see that it's traded lower here and is not as square across here, but the pattern is still the same in terms of, an A wave up to this point here, because it does make nice counting actually in terms of an A wave, and then an A and a B and 3 here, and 5 in C here for the B, and then 5 in the C here, and then an A and a B, and then a C wave here for the A wave. This one here is an A and a B and a C for the B wave, and 5 waves for the C wave here, and then we're looking for 5 waves up through here. And I've just put this across here as a bit of a guess really, so not such a big deal, but I mean you could put that square on too, you know, but more important to count the 5 waves up. Now if we've made a mistake, the mistake would be that this move here coming down to here, and this is the same on all markets, if we just put in here the 61.8%, 50, 60% retracement level here, we can move that. So it's possible that we can just get an A wave, which we've got now, a B wave here, and a C wave to here, and then down from that point. So that's a possibility across all markets as well. So do bear that in mind if you're going long in the third wave here. You would need to identify that the third wave is actually stronger and more upright than the first wave here. If it's on more of an angle here, the next wave up, that should be a third wave and stronger than wave 1. If it's on a lazy sort of angle here, then you know that it's possibly a wave C. But in all cases, do understand where your 50 and 60% retracement level is here, and then guide that into the closest largest number here, and you can expect the market to vibrate across there, so you will have to keep your stops well out of the way, so to speak. So we'll move on to the DAX, which is the same pattern as well now. But you can see here it's not as square as the other markets, and you also notice too that I've got different labeling in the terms of this is a higher degree of structure here, but it doesn't matter. What really matters is the actual count. So as long as this well, I thought there may have been another low here for the DAX actually. It was what we were looking at yesterday. If I take wave B from this high here, then I can count from here 1, 2, 3, 4 and 5. but if counting it from here, but so this could be wave 1 here, and A, B, and C here for 2 here, and all of this, the 3rd, the 4th, and the 5th. But I don't think that's going to pan out in line with the US markets and the rest of them. So I need to put wave B here, and then just look at this as the 5-wave structure here. So as long as that low holds in place here, then we can expect it up here further. So the long trades would be above the 10,000, and anything below that would be at slight risk. So a nice tested support on the 10,000. Of course, you can enter earlier in here as well. And this runs right through to the other markets as well, the AEX as well, the B wave that we're looking for here. It's basically the same thing. So we're looking for further upside here, but to confirm that, this box here, the 61.8% of this last move here, would need to become the support here. So that's something that you can look for on 435. If you get that, then you know you're going to be working above the 450 at that stage. Right, the CAC is the same as well. The French market, we can just see here that we've got wave B completed on the 4,500 and a move to the upside. Once again here, it would be confirmation to get support on the 4,600 there. So if you get support there, you can trade up long to 4,800. I've got this going up above that, but it could be, let's just count the waves up there. That's the best way to do this. But I'd be looking at the old highs of across the top there, and also at the 4,800 more so. The FTSE is also the same as well. So when we're looking at the FTSE here, we can see that exactly the same situation as well. The FTSE's got a bit of a mind of its own, which is fine, and is really testing the lows here. So it may even have another low before we see this move up, but it will tag along with the rest of the markets, so to speak. That's what we're sort of looking at there. And this is also the same for the US markets as well. So it will be important for you to keep an eye on the S&P 500. Don't worry about the NASDAQ, because that's got a count of its own, and the Dow will be floating around in between the two of them. But the S&P 500 is a broader base than the Dow Jones. The Dow's probably not even the top 30 companies anymore, so still S&P 500 would be on the cash market, would be physical market, would be what you need to be looking at there. All right, okay, cheers.